Hey everybody, Brian here from quantlabs.net. Just wanted to go through this very long video of about an hour on this new analytics service, which will have a report, basically a real-time economic snapshot of the U.S. economy using government data courtesy of something called FRED, or the Federal Reserve. And the reports I give the sources of that data. So what we're doing is nothing is backward looking, but it's all forward looking. So we're forecasting based off this data. So basically in this hour-long video, which has got about 6 segments, I go through the relationship between this government data on top of using that data and how we can classify it, and then determine, with the help of over 230 different market sectors that we could choose from, courtesy of Yahoo Finance. Now, from that, it's unbelievable how much data analysis and forecasting we can do from this data. Now, the data don't lie. We're not dealing with talking pinheads here that you'll see on CNBC or Bloomberg that will base everything off of intuition. This is all based upon data provided by the government for free that anybody can get access to. But the advantages of something like this, with this type of analytics service and using this kind of system, as I call it, the AK-47, the advantages here is it can do a full, deep, and very broad analysis very quickly, and it would take literally hours just for one person, let alone hours for many analysts to do the equivalent of what you'll see in this. This is just one little sliver of what it can do. So basically what it's going to do is going to download data from the government, and then it's going to segregate based upon the type of data it's going to look at, and it's going to use, are we in expansion, are we in contraction, are we kind of partially contracting, or are we partially kind of expanding? And it's all done on a monthly basis, and I measure it over a quarterly basis as well, or 4 months. From there, what we can do is, if we're kind of partially expanding or partially contracting, I explain this in all these videos, is I can then use also other government data like PMI as a way to confirm if we're still expanding or not. And then we can still determine what type of market sectors we focus on for trading potential. And then from there, what we can do is pick off those market sectors and then do further scans on those sectors, of those market sectors, and determine a long and a short. Now this is where it gets really cool, is that when we know our long and our short, we can add them to a watch list. That watch list then becomes basically this big list of trading pair potential opportunities that we can then measure to measure things like the spread, ATR, some other technical, and some other data like statistical, whatever. From there, we can then determine if we are ready to take on a position, and the system will analyze all that while you take on that position as well. That is in other videos, but this particular video or series of videos for the hour goes through this entire process to go through government data, pick off the right market sectors with pure data, no intuition here. It's a system that does this, and then determine from there what sectors to focus on. And here's the exciting part. Not only can this do equities or just US, I could focus on UK, I could focus on Germany, I could even focus on China if I want. But for my own testing and what I've seen thus far, the only 2 countries in the world that this will work for is obviously the US, because there's almost 14 or 15,000 stocks to pick from. On top of, UK's got quite a few too. On top of what's going with both the US and the UK is very transparent markets, as well as very liquid and very transparent, versus something like China, where we can question that data and, you know, is it manipulated or not? We don't know. So that's just on the UK and US markets for stocks. Now, I've done some further testing. If you wait till the end of this entire video, I show that not only can you figure out market sectors or categories just for stocks, but you could also, this is the exciting part, you can also determine this for indexes, you can also determine it for mutual funds, and you can maybe down the line do it for ETFs as well. But why would you do just ETFs? But also you can do the same type of analysis both for currencies as well as future contracts. And there's tons of data to work from. But that is moving down the line. But in the immediate future, we're just going to focus, again, as I said, on the US and UK. So I've done enough blabbing in this funny enough video, and let's get down to the exciting stuff. We're presenting a full hour on how this economic data snapshot can be retrieved and measured, and how we can determine market sectors from it. And there's a whole hour of it, and I hope you watch it to fully understand the relationship and how it works. Okay, and this is how the AK-47 will determine all this using as part of our new analytics service for this. Okay, so over and out. Hopefully give me some feedback, because I'm really excited about this and want to show it to you. Talk to you later. Hey everybody, it's Brian here. Okay, in this video, I want to show you a couple things. What we've got here are the different market sectors. Now, as you know, or hopefully you know, for any stock, there's a defensive and a cyclical. Cyclical is usually for expansion mode, and defensive is when you go into like a contraction mode, like recessionary type of economic conditions. And then also, if you've been following me through this AK-47 business for the analytics system, we've got here our government source data. This is segregated both for European, including UK, and US. So I've segregated out a service, retail, consumer, durable, manufacturing, and non-durable manufacturing. So that enables you to segregate pretty well all the different stocks for different categories and for different market conditions. Now, apparently, I'm just kind of intuition here, it's guessing, but there are sources that you can get the exact correct. Is this particular stock a cyclical or a defensive, and which area would it be impacted by on your government source? So this is all what you're seeing here is just all pretty well guessing. I've got a spreadsheet you can download on my site for that. So what we've got here is we've got the basic materials, conglomerates, consumer goods, and all, and so on and so forth. And what I've also done is, which was kind of labor intensive, right here, what I've done is I've got a separate posting for this. In here, based on this spreadsheet, so let's say for instance if N, which is non-durable, is in contraction, it should impact these sectors. Okay, so let's say your non-durable goes into contraction. These are particular sectors that you could focus on. Okay, so these numbers here represent how many stocks are in that sector, and these are just specifically to the US. Okay, now because this is all determined by Yahoo Finance data, and what I plan to do is, if I know, let's say for instance, that non-durable is going to contraction over the next month, and then there's also at the same time been building for the last 2-3 months of contraction, you know, I'm going to play and have scans done on the on these market sectors that are non-durable and are good for contraction. So from here I should be able to determine my longs and my shorts. But this is all, again, initial testing, you know, to get this. This is just to test, hopefully to get the right optimal pairs for long and short. But there could be better ways, and I'm sure there are. But for now, what I'm planning to do is, so let's say, as I said, non-durable goes into contraction. I got all these different market sectors to scan, right? So because I am dealing with Yahoo Finance, and I've got scripts that first do the scan, which will go out, grab implied volatility, statistical info, EPS, and ATR. They do a lot of requests against Yahoo Finance servers. And at some point, using my IP, it's going to block me, if I put in too many requests in a small, short amount of time. So I have to be really careful on the sectors I choose. So what I plan to do is initially to set out, when I start out this service, probably just to focus on certain sectors. And I'm going to determine it by the number of stocks in that particular sector. So for instance, I'll probably just use these three for non-durable contraction. I don't know, maybe this is good enough for just independent oil and gas, and maybe that one alone. But you'll see that there's these smaller ones, let's say diversified computer systems. I mean, what's the likelihood I'll find a long and a short, realistically, that's worth playing, that meets all my risk parameters? Probably pretty minimal. But maybe this one, application software, it might have some good opportunities for a long and a short. So I'm just highlighting this as something I need to be cognizant of. Like, for instance, if you look at durables that goes into expansion, look at the number of market sectors I can scan. But again, a lot of these sectors don't have, let's say, I don't know, there was one that had like this one, independent oil and gas. Like, out of that, they don't have these big numbers. I mean, there might be, 50? 78 here. But you get what I'm trying to say. But this is all trial and error, to be honest. So at the end of the day, to be honest, I do see myself moving, obviously, from Yahoo Finance into something like IQFeed. Why? Well, it's pretty obvious that with IQFeed, I'm paying for the service, so I can do as many requests as I want. So I don't have to worry about these limitations that Yahoo Finance gives. But for now, I'm on Yahoo Finance. But eventually, I'll need to go on to IQFeed. So that's something I need to consider. Now, every single category or sector or whatever you want to call it has expansion when the good times hit for that particular sector, and a defensive when it goes into contraction. So there's a lot of opportunity here, both on the short and the long. So I'm pretty excited to set this up. And this is just, again, on U.S. equities. We're not also considering UK. As I've said in past videos, with this system, it may not find as many opportunities, but it could. But what I do envision is, because there's so much data here and so much scanning going on, it's going to add a lot of potential pairs onto the watch list. And thankfully, it's going to be automated, but it's going to be able to do it fairly quickly. I mean, this is the work of, realistically, like for a bank or a hedge fund, this is the work of dozens upon dozens of analysts and traders. The system, what it will be able to deliver, because each one will do a scan, and again, as I said, I'll do ATR, implied volatility if it has a chain, data for options. It will also do ATR and EPS. Okay, so those are some of the factors we look at, and of course statistics as well. So it's very powerful what has been developed here, and there's going to be a lot of experimentation and a lot of trial and error. So I wanted to show that. I'm just trying to think that there was something else that I wanted to show. Oh yeah. I forgot the database. Now, you may have not remembered this, but this is how I got these numbers from my database. Okay, so in this case, this query has category name, how many textile industrial stocks do I have in the US? Okay, so I could also do it by country. UK, for instance, probably won't show anything. Okay, that's what I thought. Maybe China. If that will come up. Well, let me just see what we got here by country. Or actually, no, let me just stick with that. And then I'll get rid of this guy. But this database is very powerful. I've shown how I built this. You can see here I have different countries. And obviously US is the bulk of them, but there's Hong Kong, India, Germany. Now, the problem with these other countries, these stocks, first of all, I still believe in the fundamentals of something like a Warren Buffett only trade things that you know. What's the likelihood I'll know of this company, whatever it is, from India? I don't know. Will I play it? No. I've explained this before. Same with Germany. There's just one. This is just one sector out of, I think it's 250. Now, the other problem is playing with outside of US and UK. A lot of the liquidity is just not there. The volume's just not there, and it's just not worth risking capital. The returns are probably going to be pretty low anyways. I'd rather work with a transparent market. Obviously, the US is the best, and probably UK is number 2. And the volume's there too, which obviously give you liquidity. So all these other countries are fun to play with, but realistically, from a trading perspective, they're kind of not worth it. But I do have the capability if I want down the line. But for now, I'm just going to focus on USA and UK. So that's it. I just want to show you this. And if you haven't seen my database, it's pretty killer. I break it down by everything, not just stocks. We've got commodities, we've got mutual funds, we've got futures. It's insane what I have available. And yeah, but that's how scanning will work based on the sector for pretty well US and UK. Talk to you later. Hello everybody, my name of course is Brian Downing here. In this video I'm going to show you the relationship between government data, market direction, and the sort of things you can pull off to get access to sectors. Now here's my script called the Snapshot of Fred. This is my real-time analytics that I can use for where the U.S. economy is at and the direction of certain stocks or whatever, or different areas in the U.S. market and the direction it could possibly go. So in here I've run this script as is. So I have here housing starts, and this is coming in from the Fed data from the U.S. Fed or wherever this report comes from. Those are the typical numbers, and the bottom being the most recent. It's a little matrix. So I do a little calculation on how it works. Then I want to get a sense of direction. So what I've got here, little signals saying, for this little matrix, it's what I call a flat line. But you still want to know for the last month, where did it go? Was it expanding? Was it contracting? So that's what this FE means. Flat line, expanding. Let's say unemployment. We are looking at direction, meaning expanding, which means the economy is expanding. We could have direction on PMI, flatlining, but the last month is contracting, as you can see here. Let's see, the industrials. It is flatlining but expanding, as you can see here. So these sort of things are pretty important. Now, where do we go from there? Okay, so what I've got here is I've got the same script will load in a spreadsheet, basically. I'm going to show you that in a minute. But this is what the data looks like. So we have our market segments, and basically what we have here, are they defensive or are they and what sector are we dealing with here? Okay, let me just show you this guy. All right, let me just show you the spreadsheet. It's the same thing. So, okay, so we have here our different government. Now, this is taken out of the European sector, but it can be easily applied to the U.S. And this can also be applied to any country in Europe as well, even China if we wanted. But usually there's service, retail, consumer, durable, non-durable, and then housing. Okay, I just added housing just now. So I've broken it out each sector here. And there's 250, let's say, different market sectors according to Yahoo on what they track. Okay, so let's say 233. So utilities and these 4 utility sectors and so on and so forth. I've also done a calculation on the total number of stocks in this any of these particular sectors. Now again, this can be applied, what I'm about to show you can easily be applied to pretty well anything related around commodity, options, futures, based around the sector. And each sector obviously impacts something else in the economy. If it's industrial or manufacturing and services, vice versa, there's always a relationship around everything. So we have these sectors here now, right? So in my case, what I'm going to do is, okay, let me just go back to my MATLAB here. So in MATLAB here, we have our sector, right? And let's say, I don't know, I'll just randomly pick one. Our PMI direction says, what was our PMI direction? PMI direction was contracting. Like it's been flatlining, but it's contracting on the last month. Okay, so what does that mean? Maybe for PMI manufacturing, let's say that might mean that one of the durable sectors we could pick off. Maybe there's an opportunity in defensive for that particular sector. So let's look for some manufacturing. Okay, so we're going to look for industrial good, where I just saw it. Industrial goods right here. So any of these are telling me that the PMI being going into contraction, we may have potentially an opportunity in the area of defensive. So let's see. What do we got? We got aerospace, defense, aerospace, product services, major diversified, and this one, waste management. Usually these could be wrong. I've mentioned that before, but this is just, as is, maybe a good play, right? So we know those are durable, defensive. So what does that mean? Well, our next other process is a script that will run a scan in each of these sectors. So let me show you how we do that. So if you come into my database with a Postgres, this is using Razor SQL. I've shown this before in various videos in my blog. So what was one of those defensives? Let's choose waste management just for kicks. Yes, thank you. So we're going to do waste management, right? So let's do a query on that database, and let me show you how the relationship works. Basically, because we're using Yahoo, these are pretty well the stocks that we could use for these potential opportunities. But this, again, is automated, okay? So I got a query here. I'm going to do a query on the stock table, the country for the U.S., and the category name of waste management. Okay, let me just grab that properly. It's pretty well what the system's going to do. Yeah, there. That's it, and run that query. So here we go. These are all the stocks that we could look at for a long and a short for waste management. So we have all that. So the next step is, and I've talked about this before in other past videos, is then we can start running scans and doing our risk assessment to see which one could possibly be a long and a short. And over time, I could add in other sectors that may be related to, let's say, waste management, but let's say it does go into a defensive. We could look for maybe a long, actually, we would look for a long here, and maybe a short, anything related to this sector that might counteract it. whatever it might be, to find a short. So there's so many different ways we can cross-reference this one sector for this direction being defensive or contraction, and maybe looking for a short in the opposite direction, meaning another stock that would be cyclical, and that would be a weak player. Or there's different ways to do it. But for now, as I'm starting out, just to reduce the complexities, I'm just going to be looking for both a long and a short within the same sector. Just so people know, just so people can understand the relationship on how I'm going to do now, scan my next step. And again, I've shown videos on that, in this case, for waste management, how to get a long and a short. But hopefully, you see the power of it. Talk to you. Hey, Brian here from quantlabs.net. I just want to give you a sneak peek of what we call, this is one of my new scripts for my AK-47. This is called the snapshot of Fred. So it's going to download all the data, government data from Fred, the Federal Reserve, certain indicators. Now, the goal here is a number of things. First, we want to get a general idea of what's happening in the market, basically the economy of the U.S. This can be done for any country that provides source code. You can get that code through Fred themselves. I've shown links on my blog where to go, or you can go to Quandl and just know what download code you need. But in this specific example, I just run this against the Fred files. Another process that downloads it. I've walked people through how to do that. But typically what we're grabbing here are various indicators. ISM, PMI, insured unemployed, manufactured new goods, durable goods, M2 money supply or money stock, consumer durable good industries, Michigan consumer durable goods in industries, ratio of manufacturers' total inventories to shipments for durable goods, unemployment rate, industrial production, housing starts, privately owned, so it's non-government, manufacturers' total inventories to shipment for durable industries, employment, professional, and business services, that's a key one, industrial production, durable consumer goods, and industrial production, non-durable manufacturing. Okay, so these are the last 6. I think it's 1, 2, 3, 4, 5. I think it's 5 of each that I'm collecting. Now, let me just show you what I'm doing here. So I am retrieving the last 5. So it's going to go into this. So we got PMI, which is the first one. Now this is MATLAB, just so people know. So here, this is the most recent one, the 56.6. You can see it's sort of gone up and then started to decline here for November. These are things that usually you will not hear about collectively. To hear momentum, you'll just get this one figure, but it generally gives you an idea of momentum on which direction things are going. From here, you're going to get a snapshot not just only on the economy, but different sectors within the economy that might pose or might have trading opportunities in the coming month. Obviously, up until this point here, it was growing. This is the general PMI. And then it dropped off for November. Don't ask me why, but I'm just giving you from a human perspective, okay? To do this manually, collectively like this over how many, I don't know how many reports we got. 6, no, sorry, yeah, it's 6, 8, 10, 12, 14 reports. And you can drill it right down to a city with the Fred data that you can get from the St. Louis Federal Reserve. All right, so let's check out all of these. So again, we have the PMI, so it's on the decline. Now, I'll show you a few other ones. This was clearly choppy growth, and definitely the last 3 months up until October, it was growing. You're in expansion, and then suddenly it drops off. Unemployment, which one do we want? This is, what kind of unemployment is this? So that unemployment is insured unemployed. Okay, so what's happening here is the number of new unemployed officially each month. It's pretty well stayed the same for the last 5 months, so it's not going anywhere. Manufacturing new goods, durable. Durable meaning hard goods like airplanes, autos. Those are pretty strong sectors that the U.S. is really good for. We're looking for DG. What's DG tell us? Okay, so DG is telling us growing, and then it suddenly drops off. Those are where the good jobs are. Okay? Now, again, I'm giving you the human perspective, but would you have known about that in the, if you're watching Bloomberg or CNBC? You know, they'll specifically give you an idea. They don't talk about the data and the rationale, but this clearly is an indicator growing up until that would have been, this number would have been September, and then boom, it just suddenly dropped off again. So, not a good sign. Money supply or money stock. This is the economy generally. How much money is out there in the economy? Well, you can clearly see here it was quite a lot, and then it just dropped off again. Now we're looking for DGI, and that's consumer durable good industries. I'm gonna say maybe electronics for consumers. So this sector is clearly relying on the consumer and the health of the consumer. So what are we looking at here? Growing, and then it drops off again, but it grows. It comes back. So to me, that's kind of choppy. I don't know. I wouldn't be surprised if that next number will drop off. Just my feeling. Consumer okay, we cover that. University of Michigan consumer durable good industries. We'll skip that. That's a bug. Ratio of manufacturing total inventories. Okay, to shipments. This is really important. Why? Because yeah, you can make stuff, but are you shipping them? Meaning, are your supply, your inventories are growing? When it's growing, that's not a good sign. So let's see what this says. It's dropping off. So the inventory was growing, but it's dropping off. So it's good. So they're actually shipping stuff out of the warehouses. Good. But again, you know, it's choppy, flatlining. What else we got here? What do we got here? Manufactured total inventory shipments, unemployment rate. We know all about that. Obviously, it's coming down. That's good. But I'm going to show you something that will kind of not surprise you. Industrial production. I guess this is the heavy production, IND. This is the indicator. There is some growth. Actually, it seems to be expanding, which is good. Housing starts. Again, this is related around how the consumer, are they buying up property? Now, here's another one. Privately owned. You don't want government, because government will artificially inflate these numbers if they want to have some kind of expansion program in case things go to hell and they're just trying to get people employed. So it doesn't really count. It's not a real true reflection of the economy. HS. Housing starts. Okay, again, it's choppy, but it's sort of not too bad. But I would expect these numbers to drop off during the winter, December through, I guess, February. So that would not surprise me. Next number, TI. Total inventories of shipments on durable goods. Same thing, on our inventories. These are important. There's a bit of an increase happening. So they're making stuff, but they ain't shipping them. Okay, what else we got here? TI we just did. The employment, professional, and business services. Now this is key. I'm going to show you something here. Okay, this is clear-cut expansion. Okay, these are definitely on the incline. It's growing for the last 6 months. So that is definitely opportunity, and that's a ding, 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 you know? Those are opportunities waiting. Okay, so let's talk about this for a second. Let's say our system was watching this every month. Right here and right here, if we see those upticks, the system would see that there is some growth happening. Now, if it was 3 months like to here, then you know you're onto something. During each month, pairs would be selected, long and short. They'd be added to the watch list, and some of these pairs may not work out. So there's going to be a different mix of pairs. And again, we can run these daily, regardless if it's monthly or not. We have total absolute control over that. So we may see different pairs, add them to the watch list, run other metrics and indicators to see how they do collectively on a daily, weekly. And what we're looking for as this expansion happens in this professional business services, what we have here is potentially lots of trading opportunities that we can use for long and short to optimize this, because this is definitely something to, like, let's say if we put a position here, it may have closed out after the third month, and that would have definitely been a nice trade, because why? It's consistently growing, and that spread would have grown as well. So that profit probably would have been a nice one. So these are sort of opportunities you would get, but again, we don't see that in the news. I'm not sure if a lot of traders would see it as well, but the system would definitely see it. So that's one of the advantages of automated trading. So I just wanted to highlight that. We got here industrial production, non-durable. Now again, non-durable are things like software application or application software companies, that are not cigarettes, I don't know, things like that. Tobacco, I should say. Let's check out that area. So again, it's choppy. Now what this says here, we can still open up, add them to watch list and just see how these pairs trade on the watch list when there's opportunities that arise. So again, these are things that we can be on the lookout for thanks to the system. Non-durable in manufacturing, NAIC, again, flatlining. Actually, but you can see there's a little bit of an uptick here. Last 3 months. Actually, there's a nice run-up. It's not huge, but it's definitely expanding. Okay? So again, here's another opportunity, but this one, the PBS, which is professional business services areas that are growing much faster. So that's good. Now we could also do the same thing with the UK and so on and so forth. So I've talked about the sectors can come out of this. And then even if we have an opposite action happening where it's contracting versus expanding, obviously if you have 3 of these, that's a decline for 3 months, which is officially a recession. So we can see that, and then again, we segregate out, and I do believe I talked about it in this video series, that you have your cyclicals. So in this case, because we have consistent growth over the last 6 months, we focus on the cyclicals. If it's the opposite, where everything's on a steady decline, we're going to focus on defensives. If it's flatlining, what I'll probably do in the system is try to measure over the last 3 months, and if there's 2 months in a row that are growing, that means maybe we've hit a trough and we're now on our way to an up cycle. So there's a lot of opportunity here. I just want to highlight these, and hopefully you'll see my sectors, the defensives, and the cyclicals that you can use to narrow out or to segregate your long and your shorts from those sectors. Hopefully this will help you out. Everybody, Brian here in my MATLAB. Just wanted to just show you another section of sectors that we can scan of the economic conditions, I guess, in different parts of the U.S. economy. So let me just show you some of the scan results we've got. I've added this one, retail. So we're a bit flatlining if you look at these last 4 results, it's been flatlining, but it's expanding. PMI, it's flatlining and contracting. Unemployment, this is the opposite view actually. When it's contracting means it's falling, which means it's a healthy consumer because people are getting jobs because unemployment's obviously coming down. Just another example here. So we have the money supply contracting, just flatlining but contracting. Industrial expanding, but it's been flatlining for the last 4 months, but for the last month it's expanding, and so on and so forth. So what we can do now is based around that with our spreadsheet that I've shown you with our market sectors, we can now run it and we can get results. So based upon the results that I've shown you for the consumer, based on the unemployment numbers, we can tell, hey, look at these sectors. These could have some potential trading opportunities for the next 30 to 90 days. So anything related around the consumer, I don't know, confectionery, textile, lodging, major airlines, it's different areas. So let's take, where's our housing? According to this, our housing is expanding. So these are the areas that we can look at for those numbers on these sectors for housing. For durables, durable manufacturing, these are our sectors that we can again pay attention to. So what is our sector duration? That is, just give me a second here, I can tell you. For durables, that's non-durable. We want non-durables, so we're looking for IND-DIR. So that is IND-DIR. So that's expanding. So these are the sectors that we can look at. And then we have non-durable. Let's see, non-durable would be NAIC, so that is NIC direction, that's expanding. Non-durable expanding, these are the industries to look at, aluminum, so on and so forth. But you kind of get the idea. I'm already seeing some bugs here, but yeah, this is pretty exciting. Just wanted to give you a rundown how this works. So the next step is obviously to run scans on each sector to determine our long and short, and I've shown past videos on how to do that. Brian here from quantlabs.net. I'm going to walk you through this new report called the U.S. Economic Snapshot Idea Generation. Now this report generated here on the date of December 14th. Okay, so let's talk about it. All the data that I gather is from this website right here at the research.stlouisfed.org. First thing I display is the data for the last 4 months. Now, I also do show a full a chart of each one. And if you're only interested in the last 4 months, which would make sense, what do you care about beyond 4 months, right? So I get the ISM PMI, insured unemployed, manufacturing new goods, durable goods, money stock M2, consumer durable good industries, Michigan consumer durable goods and industries is basically the sentiment. The ratio of manufacturers' total inventories to shipments for durable goods and industries, unemployment rate, industrial production, housing starts. These are private, not government. Manufacturer total inventories to shipments for durable goods. All employees, professional business services, okay? Non-durable consumer goods, industrial production. Again, non-durable manufacturing, retail, and food services sales. So basically what I do here is I categorize these for market direction based upon these categories I just showed you. Some of them are used, some of them are not. And I'm going to show you which ones are used right now. So what I do is I give a category of FE, FC, C, or E. There's only 4 categories. So you can have full contraction, or you can have full expansion. So it's E or C. On top of that, it could flatline or basically chop. Basically be in a choppy position, sort of like this. This is a good choppy one. Well, not really. Bad example. Here's a good one. You got 2 months of negative, 2 months of positive. Before I forget, these are differentiated. Some of them, actually no, they seem to be raw data. All right, so back to my code. So we have, as I said, I've shown you the choppiness of 4 months of activity. So as a result, we can have full contraction or full expansion, or we have what I call FE, partial, where it's flatlining expansion, and then we can have also flatlining contraction. So how do I go about measuring that? If it's partial but it's expanding, it's simple. If the current last month, which is forward-looking, is positive, then you're expanding. If it's negative, then it's contracting. So it's pretty simple. So in this case, we have durable, flatlining, but expanding. And then we have our housing starts direction. It's flatlining, but expanding. Okay, so I want people to realize that. So we got one for each one of these. Now, sometimes if it's flatlining, expanding or flatlining contraction, I sometimes will use other indicators like PMI to confirm, it's not full expansion or full contraction, but it's good enough to use the PMI for manufacturing to say, well, how's the PMI? Is it positive? Okay, that is an additional confirmation that you can use. Say, if it's positive, but it's kind of flatlining, expanding, but if the PMI says it's expanding, well, it's expanding, but not fully. Hopefully you get that. So as a result, what we can do is we can then figure out what our sectors of focus will be for, let's say, the consumer, housing starts, because that will impact certain market sectors, durable manufacturing, depending upon if it's a defensive or a cyclical. In this case, it's defensive. This is cyclical. This is definitely cyclical for consumer. Okay, so I do measure if it's defensive or cyclical. And we also have non-durable that we measure, and these are sectors we can use. We also segregate it by services on top of last one, retail. So these are the market sectors we can use. Now, I have shown spreadsheets for that. Actually, yeah. So these are the sectors. I've shown this in my blog. I've got different videos on it. So again, consumer goods, the top here, is it a cyclical, and what kind of government categories? Is it retail, consumer, is it durable, non-durable, housing? So I segregate them all. Now these might not be exact. That's why I post the stuff, just to get confirmation from you guys and ladies. I don't want to forget the ladies in the house. So that's how we do the market sectors. On top of, this is where it gets very, very complicated. Okay, so let's say in, housing starts. Housing starts, this is just one example of one of classification based on the government categories. So let's say with housing, let me think here. I think we had, yeah. So let's say in this case, for example, non-durable manufacturing. It selects these categories. So let me pull up that document again. So we want aluminum right here. So we have aluminum, copper, independent oil and gas, so on and so forth, right? So I just want to put a caveat for people on the system and how it works with Yahoo Finance. Because I'm using Yahoo Finance and the segregation and all this stuff is already done, for now, what I need to do is to sort of make sure that these requests that are going out to Yahoo Finance do not hit the limitation where Yahoo Finance servers are going to reject my requests. So in essence, for each of these sections, I need to limit, as I start out, limit the number of requests to see what the upper limits of how far I can take it with these requests to the Yahoo Finance servers. So in essence, what I'm doing is I'm going to choose one of these market sectors under each of these classifications. So retail, I'll only choose one. For services, I'll only choose one. So how do I do that? Well, these numbers right here are the number of stocks in the US that are based around this biotechnology. So I have to choose very carefully. Do I choose, in this case, well, let's stick with what we have, aluminum. So I know there's going to be virtually nothing coming out of aluminum. There's too few. But independent oil and gas may be a good choice. Industrial metals and minerals may be a good choice. And application software may be a good choice, just for the sheer number of stocks I can pick from these. So I might choose those three for this government sectors or services or whatever you want to call it. So I'm just trying to walk you through the thought process for this system. What happens after this for each market sector that's chosen? Well, I've shown other videos and blog postings. We choose a market sector, then we can go ahead and run further scans on all those stocks that I've listed here, 21 of these, let's say, and pick a long and a short. And that's all determined again. Hopefully you've seen the videos, or if not, look them up on various economic indicators, EPS, earnings price per share, some statistics, implied volatility if those particular stocks have option chain data I have access to, and ATR is the other one for the different 3 periods. Now do remember, these are all forward-looking. All this is forward-looking. There's nothing backward-looking at all. There's no historical anything in this analysis. It's all forward-looking. Okay, so I just want to mention that. Hopefully you can see the logic here in this video with this new report that I've put together. This is kind of like the nerve center. You can call it the intelligence of the whole thing, where it's pulling in the government data, using all the categories I've shown you here, all the PMI, all that stuff, and then from there being able to determine, based upon that direction that's being reported, and then figuring out which market sectors to work on, and then from there determine which trading pairs look good, and then add them to a watch list. So that's pretty well it. Hopefully that makes sense to you. Talk to you later. Hello everybody, my name is of course Brian Downing from quantlabs.net. I just wanted to show you something. If you've been seeing my analysis that I can do on stocks, this is in my database, for all my database. I just want to show you the type of assets that I can have similar types of analysis that I could do. First, I can do, while I'm here, mutual funds. So I have over 14,000, almost 14,500 mutual funds to choose from. So let me just keep this query here. Okay, what I'm going to do is I just want to show you some of the types of mutual funds that we can gather here. Now this is from a global perspective. Now I can easily grab all kinds of data from any of these, including the countries of Hong Kong, US, Germany, wherever, okay? Canada even, where I'm at, and these are mutual funds, all right? So just want to let people know that you can do mutual fund analysis, no different than I want to do for the pair trading that I'm doing. So I can write separate MATLAB scripts for whatever I want pretty well, but it's a data that pretty well drives a lot of it. So we know we got mutual funds covered. I'll do ETF. So here's all the ETFs that I can have access to. Pretty powerful stuff here, as you can imagine. Also, we can do futures. I think it's just future here. So because of here, I can pretty well do anything I want in terms of just analyzing various stocks that are at my disposal. So we have them. Well, let me just go through and show you the individual ones. So we have mutual fund, I showed you, future ETF, and I think there's one more. Mutual fund, there is one more. Stocks I've shown you. Mutual fund, I've shown you. Indexes, that's right. Alright. So there you go. We can also do indexes as well. Okay, so that is very cool. I just wanted to let you know that because this is going to be pretty solid as we move forward. All right, I'll talk to you later. Bye.